you're going to get a multiple compression where companies could still continue to earn good money, but the multiples, could also contract. I'm starting to look at Deere. It's at the high end of this trading range here. But, I've noticed kind of these inside bars. So we've got an inside bar in the daily and the weekly. So you can see that Deere's trading at the high end of a trading range. It's ready to bust out. But this week it's stalled, right? It's, sorry, let me grab this tool, where you've got this inside week bar where the range of this week literally sits within the range of the previous week. And what this says to me is, yes, this is going higher and it's bumping up against resistance, but it's stalled. This week, despite the bull market, it couldn't make any progress to the upside, and it's stalling. And sometimes when it stalls, it can get thrown into reverse very, very quickly. And again, the best way to play this objectively, just sneak a sell stop underneath this low and let the market confirm. So, next week the market opens and doesn't quite go and then goes and makes a new high, then, no harm, no foul. On the other hand, if you kind of take out this low, you could very quickly, give up the ghost here. So it's these kind of, risk reward things where, inherently by virtue of a narrow range, you've got a smaller risk. So I think this low is like 382. And it's also on the daily. So I would kind of wait for this week to come and go. And then, it looks like we're stalling on the daily and the weekly. Now, look, this could be just consolidating and, gathering steam to put on a push to make new highs. And I wouldn't rule it out. And that's the beauty of a sell stop, where you put a pending order underneath here. And if the market keeps going up, then you're not put in the market. But if it triggers you, you could get a quick roll out of here. So this is Deere. You've got this huge reversal right here. You're at this top. And so to my mind, when I look at something at a top, either the market is going to confirm it and it should happen very quickly, or if it doesn't, then, it's likely that if the more we hang out here, eventually it's going to break through. So one way or another, there's, pending opportunity here on Deere. It's either going to go and push through these highs and make new highs, or it's going to roll over here. Powell talked that the economy's still strong, companies are still earning money, still good. But there's something called multiple compression. Like I remember when Steve Ballmer was head of Microsoft, that company was earning money every single year and the stock was going down every single year. So it is possible to have positive earnings and a declining stock price because the multiple gets compressed. And I think with the Fed now solidly in the face of the stock market, you're going to get a multiple compression where companies could still continue to earn good money, but the multiples, could also contract. So again, I hate to think like that, but to me, the fundamentals and the technicals, are aligning. But having said that, the S&P never wants to go down. This is why I think, it's a great hedge to go long the S&P and short the NASDAQ. Because I think it's a very unfavorable environment for growth stocks. But, on a relative basis, the S&P never wants to go down. You can see it's just been a struggle. And again, this is the difficulty that, I look at with the S&P, where on one hand, you have the appearance of a pattern. On the other hand, it just never gets going to the downside. You just always going up. The S&P is always going up. Makes a new low, close on the high. Makes a new low, close on the high. And so this is where, you have kind of inherently a bit of a pattern. Never really got going like the NASDAQ. And yet the price action, keeps on looking like it wants to go higher. And so you can see on a relative basis, the S&P's come off very little, where the NASDAQ's come off, over 20% this year. And so to my mind, that would be a great hedge. Buy the S&P and sell the NASDAQ. And I guarantee you over a year, you'll make money doing that. So, we're kind of sitting right at this trend line. These things are pretty arbitrary. So you're just in this channel. So it's a tough environment here. You can see that, S&P has gone nowhere. It's just been a boxing match. So this is where you can chew up a lot of intellectual capital and financial capital. So the thing is always to kind of wait for these pockets to appear and find these better, risk reward opportunities. And right now, I find them few and far between. I'm really challenged to. This is Whirlpool. You got the, a solid price pattern that tells you one thing and the price action that tells you another. So, it's just, this thing looks like it's leaking lower, but, it's a case of, lower highs. And it could still, go higher before it goes lower again. So we're just, again, in this is very reflective of what's happening. And, every day is the opposite of the other. And, when these trading range environments, they can, again, chew up a lot of emotional and financial capital. So to my mind, it's always kind of waiting for that clarity. And this is, it's very hard for me because, I feel like I need to come in here every day and do this magic act and show you a trade that's going to work out. And, sometimes the best trade is to just, sit on your hands and wait, like those surfers, 5 a.m. waiting for that perfect wave.
So you can see, 45, it's 1.3 million.
$1.3 million short.
So pop out a profit for 118,000 there.
So you can see how this is going crazy now. You can see how the market just going nuts.
I bet like $1.6 million on this position. I'm showing right now $23,000 gain.